Hey guys, I made a video a couple of days ago, or I should say a couple of weeks ago, in regards to using support and resistance for your entries and exits, and I sort of wanted to make a follow-up to that video and put more emphasis on risk versus reward. And today there was a stock TTPH that I wanted to use for an example, and you guys could use this as sort of a technique going forward to establish entries with very, very low risk by buying at key levels of validated support. So without further ado, let's get started. So this is the daily chart for TTPH. As you can see, the lines that I drew are established validated levels of support. And I've said before, once you've day traded enough, all of this will become second nature to you. You know, you can just pull up a daily chart for any stock and you'll know right away where to draw out the support and resistance. And that's basically what I did here. So this line that I drew at the very bottom, you could see that on this day, I don't know if you can see my mouse, but this day and this day, as well as this day, there's 3 candlesticks that are bouncing off the 205 level. So to me, this is clearly a validated level of support. Above that, the second line, there's a whole lot of days in a row where it's just bouncing off the 235 area. So you can also use this as a good validated level of support. And if you move further down here, even though there's a couple of candlesticks that fell well below this 235 area, the fact that it closed above it is still signifying that as a validated level of support. Here is also another validated level of support. You see a couple more days that are bouncing off this 305 area, so that could be used as a good validated level of support. But if you move further down, this candlestick right here on January 16th is below this validated level of support, so naturally this becomes resistance. And any day that is signified as resistance or support, you can use that line to establish your entry and exit. So I'll definitely talk about that once we switch over to the flex grid. Here's another line that I drew because there was 2 significant days that had resistance around the 385 area. It was this day right here on the 26th of December of last year, and then the year after that, which was 2020, it's January 22nd. And you can also use this as a sort of a validated level of support. It went below that, but as long as it's around that same price area of where that actual line is, you could still use it as a validated level of support and resistance. And then here's the last line that I drew. You could use this as a validated level of support, this right here, and this is also resistance since it's below that. So once you've basically established your support and resistance, you can move over to the flex grid and sort of determine your entry based off that. So TTPH was gapping up this morning, and so you knew it was going to be in play. This pre-market setup isn't ideal because towards the end of pre-market, it started gapping down as we were getting close to market open. However, the reason why you should probably still keep a stock like this in play, you see this purple line? This purple line basically signifies the 100-day SMA on the daily chart. And this is a 200-day SMA. So these two are very, very important lines that you could use for support and resistance on the flex grid. And I would say like 7 times out of 10, if it's above it, it's going to usually play as a very good validated level of support. If it's below it, it could play as a very good validated level of resistance. It may not touch it to a T and reverse, but you'll have some kind of reversal at some point. The probabilities are very good for that. So the fact that this stock was near the 100-day SMA and this key level of support/resistance, you could sort of establish your entry using these two fine points. So let's expand on this. This is the 3-minute chart, and this is the 1-minute chart. Let me make this a little better. So the way you could have played this is, obviously you want to look at your 3-minute chart as a primary chart to establish entries and exits, but I use a 1-minute chart for precision entry, especially when I want to make sure that before I make an entry that there's correlation between both charts. What I like to do is I particularly like to see a doji stick form. So for instance, this was the last red candlestick. I would have preferred for this to be a doji. A doji stick usually indicates it's supposed to be a bullish reversal. And obviously I had to get in on the next candlestick to make a new high. But the reason why this is okay is because, again, I talk about the 100-day SMA being a very significant level of support. And I wouldn't have minded to take an entry around this 190-ish area. You know, if you're a little afraid to get in early, that's okay. You can wait for the next candlestick, green candlestick, to make a new high. But this is where risk versus reward comes in. That's primarily what the video is about. So if you wanted to make an entry here, the fact that your risk level is so low, because if you, let's just say, for instance, you made an entry around the 192 area, you know, if it broke below this 100-day SMA, I would wait for that candlestick to close. Did it close above it or below it? If it closed below it, then that's a probably good indication that you need to get out. But the fact that your risk was so low, it basically establishes the fact that this is always a good indicator to use for day trading. And again, if you felt that, you know, the fact that we were approaching this level of resistance and you sort of wanted to wait, you know, before making an entry, before it got to this area, you could do that as well too. So for instance, if you switch back over to the 3-minute chart, this bounced off this 100-day SMA, but you wanted to wait to see how it would react to this resistance point. Wait for that next 3-minute candlestick to make a new high, and as it broke, you could get in right here. And if it was a false breakout, your entry, which was, you know, again around the $2 area, isn't too far from your stop, which is around the 190 to the 185 area. 10 to 15 cents loss is a pretty good number when you're comparing your risk to your reward. And speaking of reward, obviously this stock gapped up very, very high today. You know, you could buy X amount of shares, and you know, you could sell half possibly as it breaks this resistance point right here. See how it reacts afterwards. You know, establish a stop by looking at the 1-minute chart, and you know, see if the next candlestick, you know, makes a new low. And it clearly did in here. They both stopped at 231 before going back up again. And then, you know, you could sell half again right here at this key level of resistance point. And, you know, if you wanted to wait even longer, you could just wait for it to get to the 200-day SMA, which again is a very key level of support / resistance. And in this case, it was below that, so it serves as a very significant level of resistance. So, but yeah, that's pretty much all I wanted to talk about. Again, was just how you can use support and resistance to mitigate your risk and maximize your rewards. So anyways, guys, thanks so much for watching. I'll make more tutorial videos. If there's any, you know, concepts that you guys wanted to talk about, leave them in the comments below, and I can make future videos about them in the future. So, yep. Thank you. Have a nice day. Bye.